Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 7th day of December, 2018, and this is the Daily Report for Gold and Silver. And what a week for the precious metals. Tremendous run to the upside, approximately a $26 gain over the week in gold, $10 alone coming today. Most active February gold contract is currently up $10.40 and fixed at $12.54. Of course, we are long and strong this market. We'll talk about that in detail as we pull up our technical studies. Silver also showing a nice gain today, almost 20 cents, fixed at $14.70. Platinum up about $4.60 at $7.94, and palladium continues to be a runaway freight train, $11.7310, up $31 on the day. Now, that's all with some slight breezes from the dollar. Dollar actually closing up marginally higher, up about 2 points at 96.78. But the big news, of course, was a plunging, falling Dow. The Dow down over 640 points on its low today, closing down 558 points at 24,388. NASDAQ Composite also showing a tremendous decline, 3% today alone, 69.72. And lastly, the Standard & Poor's, that closing down 62 points at 2633. Traders, I do want to start today's show by looking at a weekly chart. We can see the kind of sizable move that gold exhibited this week. When we look at where the market opened at to where the market closed at, we're looking at about a $26 move, 10 of that, as I said, occurring today, and especially when we compare it to the last 2 weeks in which we had these dojis, we can definitely see that we had a major breakout and a breakout above what I believe was a critical level of resistance that now should become support. That is the 50% retracement that occurs at 1246.80. We'll call it 1247, and we closed at 1254. So definitely above that. If you recall, we were long 2 contracts of gold. We covered one of our golds. We let the other one run. We are still long that gold. We're long from, I believe, 1231. The original December position we got in at 1218. We sold that and took a $6 profit. On the first position that we sold this week, we pulled a $14 plus profit, and we are certainly within really nice profits on our remaining long position of gold. And traders, without any question, I do believe we will see higher pricing in gold next week. In terms of our current strategy and our exit targets that we are currently looking at, if you recall from earlier this week, we talked about that the first level that we needed to break above would be the 50% retracement. We did that with a fever today. And then we said that once we broke above that, we would be looking at this 200-day moving average. 200-day moving average is currently at about 1260. So we're only about $6 away from that. My current target is going to be obviously 1260 to 1276. 1276 seems very reasonable at this point. We first obviously need to see how the market reacts if and when it trades to the 200-day moving average. But my sense is if we get a solid break above the 200-day moving average, that's really signaling that we have returned to a long-term bullish trend. Right now, we are in an intermediate bullish trend. We talked about the fact that earlier we had that golden cross between the 50-day and the 100-day moving average. That is widening, and that is telling me that we are in store for higher pricing in gold next week. For right now, my recommendation is obviously to maintain our current long position, to maintain our stop. We will look to move our stops up, and we'll be moving them most definitely just behind the 50% Fibonacci retracement sitting at 1247. We'll look to do that early next week. If in fact we see a dynamic break above the 200-day moving average, that to me would signal that our target would be 1276, and we would probably look to add yet another position of gold on the breakout above the 200-day moving average. Again, maintain your current long position, maintain your current stop. Traders, absolutely no doubt this week was a game changer. With the trade war at bay, we do have a 90-day truce, but there are definitely some issues there. With the jobs report that came in below expectation, an uncertain Fed in terms of how they're going to raise interest rates, and a tumbling U.S. equities markets, favor has returned to a safe haven asset, and that is gold. We saw a tremendous rise this week. I am expecting more of the same next week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.